Welcome to Momentum Monday. Today is October 25th, 2020. Howard, what's your take on home cleaning robots?
I've never gone into it. I had owned the stock for a few times. I like the robots that clean. I've been in Tuscany where I see the robots cleaning, cutting grass. Yeah, I mean, obviously they're coming. And I pick up after myself. I don't need a robot making noise picking up after me. Do you have one?
I don't have one, but I'm considering. I think it's not a bad idea.
Okay. Is there a chart I need to look at or something?
A chart? I mean, iRobot is the only one.
Yeah, I don't know why you're bringing it up. All right, give me the markets.
All right, let me share my screen real quick. And
oh, look at Ivan pitching himself.
Of course, why not? I mean, I'm not even mentioning it, but yeah, I do have a service that you should check out.
All right, market. So we're using market.
Last week, if you remember, I talked about the possibility that many of the high momentum flyers might pull back ahead of earnings, just because people would like to play it safe. And when you see a 30-50% run ahead of earnings, why not take some partial profits? And we kind of saw a little bit of weakness, pullbacks in many of the high momentum flyers. I mean, nothing significant. They're still in a steep uptrend, so it's kind of normal to see pullbacks to the at least to the rising 20 day, sometimes the 50-day. But at the same time, we saw a rotation into many of the lagging sectors. We saw small caps notably outperforming. As you can see here, IWM, which is Russell 2000.
Yeah, regional banks were helping. They were kind of strong.
Yeah, setting up for potential breakout. Yes, you're right, because we saw kind of big spike in rates, which helped banks, especially smaller banks, regional banks, to kind of spike, help the small caps. But also there was a lot of strength in like the industrial metal space, like steel, copper, iron, like a lot of the laggards. And since every day we're hearing something different about a new rumor about a new stimulus package, and every time we hear something positive, we see a spike in all those the worst hit by COVID industries, which is still in a downtrend, but every time we see some positive news, they kind of spike. So, I mean, the same message remains. Money is not really leading the market, it's just kind of rotating. And last week we saw a little bit relative weakness in big tech. It's kind of normal pullback to a rising 50-day. I think it's kind of setting up for a potential breakout here. A lot will depend on the earnings next week. Next week is the biggest week for earnings this quarter.
People need to get some sleep. This is Tuesday, Thursday, or granddaddy. I mean, if you're not prepared, this week will surprise you. I think what you said was right, Ivan, last week. A lot of these stocks, Etsy, Fiverr, all the hot ones that just run straight into earnings, and now they're pulling back. So at least, in any disappointments, maybe the shock waves won't be as bad. I mean, we had a lot of disappointments, but at the same time, the social stocks are really the story this week. And maybe because of things that's coming up, and there'll be so much discussion and attention on media, but that's my favorite. Snapchat, people know that I've been long. I miss Pinterest, but that's even done better. I'll never understand it, just because it's half the population of women at best. And whereas Snapchat is a whole generation, and it just makes more sense to me. If I'm going to choose between products I don't use, I went with Snap, but Pinterest has performed better. If we pull up pins, but look at the volume in Snap. That is not, and for the people that are bearish, I get the valuation arguments. You win. Like there's a point where I'm going to concede the argument and just shut my mouth because I don't understand it. But I do know that stocks don't move like that unless most people have been wrong. So we'll find out why most people have been wrong. Maybe Snap has a deal with Apple coming. I can't figure it out. Maybe Google buys Snapchat. I mean, maybe there's a bidding war for Pinterest and Snapchat because they're so verticalized and they so own a generation. You know, Pinterest owns women, and now young women use it, 11, 12 fashion, people that want to get into fashion, men that are building lists of stuff. Snapchat is is just literally the 15-year-olds that started out using it are now over 25 and using it, and a new generation of 15-year-olds are coming on. So it's slowly becoming its own 8 to 80 brand. And I know some dads that are using it with their kids now. So I don't know, but you can't look at those volume bars and those monthly breakouts and just go, the world is taking notice. Now, the valuation is such that it's not like people don't know it's $63 billion company that's losing money. So again, you don't go out and buy this tomorrow, but for people that have been long for the last 100% or 200%, there's just no reason to sell because this is just one of those rare, we talk about it all the time here, these rare digital assets, like a railroad was, but without all the infrastructure costs. And if we look at the railroad stocks, pull up a railroad stock, see what it's like 100 years later. These things still break out. Think about how hard it is to run a railroad. Go back and look at monthlies on any of these good railroads. There you go. I mean, yeah, they have bear markets, but like Snapchat's on its way to having a 6 generations of people using the product over the next 20 years. So you can see that maybe at 100 billion valuation that Snapchat is still buyable by one of the $1 trillion companies because it's just such a rare asset. Okay, so that's social, you know, Twitter, Snap, Facebook, Pinterest, Tencent. You know, other than Pinterest, I own them all. You know, the other big one is gaming. You know, I was getting this pitch. I was on this Pounding the Table podcast. Yeah, and Google's even strengthening up the FANG. So as the high flyers pulled back last week, Ivan, you know, the FANGs were basing nicely.
Some of them definitely. I mean, the main message from Snapchat's earnings report was they expect a significant improvement in digital ad spending, and this is why we saw all companies that rely on advertising like Google and Facebook and Pinterest and Twitter spiking up and just following Snapchat.
Well, all this political money is not going to be there for Twitter, and it's going to be there for Tencent, and it's going to be there for Snapchat and Pinterest. So all this money, well, there's no politics on Pinterest, and there's no politics on Snapchat. So they're going to be more consistent. You know, Twitter's benefiting from this cycle, but as soon as this presidency is over, unless if Trump wins again, that's something. But they're just not going to have the same benefits that Snapchat. And because of the visual formats and video formats of those other two platforms. Twitter's done great. I own some shares, but it just, you know, it's kind of doubled off the lows, whereas these other ones are up 400% or 500% off the lows. Amazon looks...
Amazon, a little pullback, but still holding low, you know.
Time after a huge run off the bottom. You know, wouldn't be surprised for it to just sit here or you know, move through 3,500 on a good number. I mean, it's just so big. I don't know. What are they expecting? $44 a share now? At 40% growth. Yeah, and 40% growth still. Wow.
Well, considering all the lockdowns that are happening right now in Europe and maybe somewhere in US, we don't know that yet.
That's a good point. I think you're seeing the e-commerce stocks stay strong because of this. You know, we're not going to lock down here. I don't think Biden, I guess, could try, and some of the Democrats, but the American is just too sloppy right now. It'll take a really bad wave for America to shut down. You know, it seems quite apathetic at the moment. But what it does mean is those Americans that don't want to go out like me and are being really careful, other than riding and golfing and not going to restaurants. It is a boon to social. It is a boon to Amazon, Shopify, the stocks that continue to do well. If we look at the two civilian stocks that matter, Boeing and Simon Property. I've been harping on this for months. They had their little oversold bounce in March, April, May. And the world is still watching those two stocks to see when this nightmare ends. Okay. And that's land and by air, right? Carnival Cruise Line, forget it. I mean, I don't know, pull up Carnival by sea.
Flat as pancakes, basically.
Yeah. The world, the volatility is built up so big in these. And you know, probably the next big move is a fake out. The last one was, and then we'll see. But these things are set. Right now, it would not shock me with the relative strength where they're at to just literally implode from more bad news, right? There's not much more they can take. And I don't think they're going to get good news no matter who's president, because the virus is still raging. And if you talk to anybody high up, and we all have people in our network, there is no way this country's getting a highly distributable, useful vaccine until June, or at scale until June or July next summer. And that's from me asking thousands of people to ask their networks and kind of triangulate this. There's no December miracle coming. And so this is, you don't need to, cloud is the only thing that'll work. And the question is, how much more valuation can you take before people sell even that? So I don't know. I think you have to be careful. The election's coming. Charts look fine, right, Ivan? The charts look fine.
Yeah, for the most part, it's mostly bullish, yeah.
Yeah, so I'm going to lead with a few ideas, and you can share a couple ideas because I don't need to do it. So if we're going to go, the shutdowns are continue. Even companies that really I don't love, like Stitch Fix, are breaking out. If you look at SFix, I kind of bought some shares just because Schmuck Insurance at this point. They never seem to be able to please. It's a small valuation still at $4 billion, but if you go to the weekly, it's breaking out. And the app itself is great. I mean, I don't like it for myself, but you're basically in new weekly closing high territory, other than the spike in 18. Small market cap, whether it's the Gap or Amazon or a retailer that just says, shut everything down, we're going all in on Stitch Fix. You know what I mean? I think there's something there. It can be bought by like 100, fast growing e-commerce companies. And then this is the one that you're pulling up. I don't know this one, Revolve.
Similar space, like the Stitch, the Fetch, and also.
I don't know if they're a platform, but Fetch is the one that I've been, buying, in the 20s, and in the, even on Friday I was buying it. So all I can say about this, it meets the criteria of things that I like. It's a platform. It's got great investors in Tencent. They are, sorry, that's my puppy.
Let's check on Chewy real quick.
So,
yeah.
She calmed down when she heard you. So if we go back to Farfetch, it's a platform. It's e-commerce. It's for rich people. They're aggregating email and data and consumer data around the best category of people that spend. Their SEO is phenomenal if you search for high-end products over Shopify. So here's a brand that's it's not cheap at $10 billion for a company that doesn't make money. But this can be 30, I'm looking for brands and platforms that can go to this. And this fits with my Fashology brand. And then obviously I continue to like Elastic. It's pulled back pretty viciously. I started buying some more last week. So Farfetch, Stitch Fix, Elastic stays in my portfolio. If it's going to bounce, it needs to bounce here. Spotify had a great week for me, Ivan. I mean,
yeah. How about advertising again?
It was resting for a while and looked like death, and now you can see a major weekly closing highs. So my portfolio is kind of set. I'm not looking, other than Stitch Fix and Farfetch, I'm trying to keep everything very digital, fashion, e-commerce focused. And I think you can, just from looking at the land-based economy, you can get sidetracked with a lot of noise in trading, but the money is still flowing into the cloud. So that's kind of where I am. Now you walk through where you see it. and I'll
Yeah,
shut up.
there's still a lot of money, and there's more money coming in, and it has to go somewhere. So we'll keep seeing those rotations between small caps and tech. And the past couple of weeks, we saw a pullback in tech, and now some of the better risk to reward setups are in tech. I mean, look at Amazon. It was a reversal candle on Friday. Obviously, earnings are next week, but I think the dips in big tech will continue to be buying opportunities. I mean, people say that a new $2 trillion, potentially $2 trillion stimulus bill will mostly help small caps, but I don't think that's true when you see so much money.
It literally does nothing. It only helps Amazon, Etsy.
Exactly. Eventually, the money will trickle down to the big tech balance sheet. That's why I think that the big tech pullbacks, despite the valuations, they still remain viable opportunities every time they pull back.
Yeah.
So yeah, I think all the big techs are setting up for a bounce. You already mentioned Stitch Fix, RVLV is in the same space. Kind of played this one last week here on the breakout above 20. It's just.
I'll check it out. I'll ask around. I just don't want to have too much exposure here, but it looks good.
Yeah, I mean, there are a lot of stocks that they're looking constructive, and many of the software names are just kind of looking similar to Elastic, just pulled back to their 50-day moving average and kind of trying to bounce from that level, like Okta, Crowd. They're all kind of looking similar. And it's kind of
all the software ones, the open source ones, are pulling back. So it's not like any one company is standing. Where's Mongo? Did it pull back too?
I think all of them get like slight pullbacks, as I said, and which is normal. They're kind of building.
Yeah. You can see there's more companies coming in. And then if we look at gaming, I got pitched while I was on this podcast, which was really good. They were explaining one that it was a SPAC. This Unity software, I've heard great things about it, Ivan. I know you were trading it, but which is a ticker. The other one that bought Skills in a SPAC is very interesting. FEAC, which I'm going to add some this week. I got convinced on this podcast that I was on that this company Skills that they have, the deal's not done, but you can go buy this company. They've targeted Skills, which is mobile gaming platform, and it was called the anyways, if you go on my stream, you'll see I linked to the podcast. These kids did a really good job of explaining Skills, so I'm going to add some of that as spec play. The worst you can see probably is 10, because below 10 they just stopped voting on this deal. But really interesting story on the Target business that they acquired called Skills. So anyways, I get 4 ideas. I rarely have 4 ideas.
Yeah, that's a good
follow
thing.
Ivan. Follow Ivan. He has 100 ideas during the week. I don't know.
Yeah, exactly. I mean, okay, real quick before we close. So what's your take on SPACs in general? Like, why do we even need them? Why can't company just IPO?
Well, first of all, it's Chamath. So anyway, everybody, I finally got Chamath on my, I created a new Zoom series. So it'll be up this week. But the way Chamath was explaining, and obviously he's biased, he's been doing the most of these, is forward-looking statements. Because, and this goes back to the old idea, we went from the pencil and filling in financial statements with pencil to Excel, and now we're in this third wave, which is I call beyond the spreadsheet, where it's all about vision, like Elon Musk and Netflix. It's not so much the balance sheet, because no one trusts it. It's about how big is the opportunity, and then it becomes about how much, like Zoom, what multiple are we willing to pay? Because these are real companies growing real fast, right? And they're very lean, right? High gross margins. So in that world, Ivan, with Goldman and with 2 basic banks to do IPOs, and the analysts don't even understand this stuff because they don't know how to price this. If we look at WeWork, they got conned in that, and they've been mispricing all the other IPOs. These VCs or these entrepreneurs like Chamath have recreated the SPAC, which says nobody knows. So what we're going to do is And in a world where we don't have to provide forward-looking guidance because Wall Street demands this like precise to the penny kind of thinking, we can go through a SPAC, which is a lot more efficient for a company to get public and allow these people with vision to go target these technology companies that just can't get out fast enough. So that SPACs are here. In a low interest rate world, they're here to stay. In a 3% interest world, 4% interest world, no. People will demand yield and take their money out of the market. But in a world where this exists and there's all this entrepreneurial activity and there's all these software companies being formed, and I'm super bullish. So hopefully that helps you there. But should you go out and just buy SPACs? No, I haven't really, other than DraftKings, I haven't really focused on it. But this gaming one got my interest. These young kids explaining skills and the amount of time spent on the skills platform, and all the developers building games for skills, and their gross margins of 95% and 60 minutes per session, not per session, the users a day that use skills. This fascinated me. And it's the same SPAC people that brought you DraftKings. And the CEO is an ex-gamer. He built a big gaming company before that I don't know. So anyways, you have to do your work, right? There's all these opportunities out there. And I think DraftKings is pulling back for many reasons. First of all, lots of competition in a low margin business from Penn, from FanDuel. If we look at MGM, they've got their own betting. I think they're in third place right now behind FanDuel. But MGM has something called MGM Bets that has, this actually looks pretty interesting, doesn't it, Ivan?
It does, yeah.
So MGM is actually third place, and no one's even ever heard of it. Ahead of Penn Gaming is MGM because they have an MGM Bets division that's focused on the same division as DraftKings. So this is the first time I've looked at that chart. So MGM actually, let's pull up Win compared to MGM. Oh, now, so there's something going on with MGM. That's interesting. So their sports division, or their fantasy sports, MGM Bets, that's making a difference right here. So I'm gonna have to add that to my watch list. Okay, so there you have it. Like, you have to do your work. Sports, fantasy, gaming. You know, I'm trying to have some exposure to this space. I own a little DraftKings on this pullback, Ivan, again, down to the 40s. But I don't have a lot of conviction because there's going to be hundreds of companies. It's like trading. There's going to be hundreds of companies that offer sports betting, you know, and odds. And I don't think in the end, if a person betting $10, Ivan, is going to matter if they have paid 3 cents or 10 cents for the trade. You know what I mean? So I don't think DraftKings has a huge edge over everybody else in that world. But that's just my opinion. I don't gamble enough to know. Do you place any bets?
No, I haven't done it yet. I thought it's still illegal in the US. But I don't know.
It probably is, for all I know. I mean, I'm really behind on this stuff. But there are now, if we look at MGM, we look at Barstool, Penn, we look at DraftKings, and then we look at Skills, which is betting on a platform where you can play each other games on the Skills platform or other platforms and bet across Skills. And then you have a world of PayPal and Square where you can pay off your bets, right? Yeah. I mean, this is like day one, and people are still farting around with Carnival Cruise Lines. I mean, it's a joke.
Yeah, PayPal.
Airlines
to accept Bitcoin.
Phenomenal. I mean, in a world where betting is going to be like global and 365 days, 24/7, where bets are settled over PayPal and Square. And then if we look at crypto, if we look at Bitcoin, I mean, it's starting to perk.
Yeah. All of them.
So,
Ethereum, Litecoin, yes.
I wonder if gold, like, I mean, I own some gold. I'm just wondering, why is that not?
Kind of sleeping. I don't know why.
Yeah, it's pretty sleepy. Yeah. So there's going to be a big move there, it looks like. Anyways, have a great week.
All right, you too, Howard. See you next week.
Big earnings week, everybody. So be careful. Mark your calendars. There's like hundreds of companies reporting this week and all the FANG stocks.
Exactly.
Okay.
All right. All right.